Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Rahul Chadha. He's the Chief Investment Officer at Mirae Assets to discuss why emerging markets could be the place to be versus developed markets in 2023. Rahul, it's great to have you with us. Welcome to Trade Talks.
And thanks for having me, Jill.
You got it. And Mirae, key player in APAC, share with us Mirae Assets 2023 market outlook.
So again, we believe that focus for 23 will move from inflation to growth slowdown. And I think that's where EMs would do well, largely led by China. See, what's happened is China has gone through this derating on growth concerns, on the lockdowns we have. And as the reopening happens over the next couple of months, we're going to see pent-up demand, kind of a comeback. We're going to see mobility increase. Government is going to do its bit to kickstart the growth. And I think that's where the upside comes.
Where are the key investment themes this year?
So again, we continue to like these consumer discretionary plays. That's a significant part of our portfolio. The internet platforms in China are good. Some of the travel and tourism names are good. Outside China, India is a structural growth story for us. So we've liked that market for the last couple of years. And I think that's a must-have in all portfolios. Again, largely led by the retail financials, the consumption names, Indonesia and Vietnam, and off-benchmark exposure. These are the great places to look at.
Well, we know the market is really focused on macro, right? And probably will be for 2023. Where are the opportunities, and then what are some of the risks with that thesis? What would you advise investors to do heading into the new year?
So I think right now market is taking a sigh of relief that they see inflation kind of coming down. But look, that was but natural. We are coming on tough comps for last year. What's also happening is we're seeing some bit of an easing of goods demand. So inflation is going to ease off. But I think the bigger question from a macro perspective for 23 is going to be, when do central banks ease and when do they get worried about growth over inflation? So I think that's the key debate. And that's where you would like to be with policymakers. You'd like to be in regions where there is a tailwind for growth from a policy action, where inflation is less of a concern. And I think that's where China stands out as a key market to watch for 2023. And then in the second half, we can see some of these other markets like Taiwan, Korea also do well, because they'll go through that period of inventory digestion for the first 6 to 9 months.
Do you think other central banks are taking cues from what we're seeing with the U.S. Fed, or are they acting a little bit more independently?
So I think Fed clearly influences the course for most central banks, but having seen US inflation kind of a peak off and Fed also turning less hawkish, becoming more neutral, I think the other central banks have also changed the tone from an extremely hawkish to more neutral, because they need to keep that interest rate differential from a currency stability perspective. So that's what our expectation is, that most of the EM central banks would be done with the hiking over the next 3 months. And then is going to be the question of when do these central banks come and start cutting the rates.
Yeah. Mirae works with Nasdaq's investment business unit. How does that help you with your asset management business?
So clearly, I think it opens inroads for us to great set of investors, etc. It helps us showcase our views to the broad public at large.
And let's wrap up with ESG here. Certainly a hot topic. What's Mirae's viewpoint on it?
So again, from our side, what we kind of preclude from investing is coal mining names, some of the tobacco names. But outside that, we invest in old economy. Our view is that, look, if India, ASEAN, or rest of the EMs have got to urbanize, you need these metals. What we back is the ESG improvers in these industries. So we are not against investing in a metal company. We are not against investing in an energy company. But we want to back the best in class in these industries, and we want to back the companies which have a clear path towards growing while reducing their carbon footprint.
All right, Rahul, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.